Hi, my name's Charlie Burton, and in conjunction with Simon Campbell, here's your Ask Charlie regular video. So today's question that we've had, and please bear in mind, I'm actually away on vacation at the moment, so these are pre-recorded videos, as you're probably already aware from the previous ones. So if you're looking at my charts thinking, Charlie, looks well out of date, that's because this is being recorded on Sunday the 5th of June. So the question this week is from a trader saying, I started trading recently and can sometimes have up to five trades open at a time. I find that the winners can offset the losers, so that's all fine. The problem is I cannot leave the charts. Can you suggest any ways that can help me manage the stress of watching the screens? Right, okay, so there's a few things to pick up on here. So where's my pen gone? There it is. Okay, there's a few things that I'm just going to pick up on here from the email. The first one that he or she has only started trading recently. Okay, so they only started trading recently. So we'll come back to that. What are the other things? Five trades at a time, five trades simultaneously, up to that is up to five trades at a time. The winners can offset the losers. That's fine. Can't leave the charts. Okay, can't leave the charts. I don't know the specific. We'll come into that in a minute. And the stress of watching the screens. Okay. Now, just picking of watching. Can I help with the alleviating or managing the stress of watching the screens? Stress of watching, if I can actually use my pen here. Okay, so immediately from that email, it's nice to see that people are making some money with this approach that this trader is using. But in my experience, there are some major holes in this, and I think that it doesn't actually have longevity because as a trader, if you can't even leave the screens because of the style that you're trading, then that's fine in the short term. But what will happen, because I'm getting the impression that this is a more mechanically based approach to trading. So he or she is having to be there because they can't afford, I'm assuming here, to miss the next setup that comes along. That is absolutely right. So the only solution that I can so this one here was, let's go straight to the can't leave the screens element, is can your strategy be programmed? Because that would be a way of overcoming that element of not being able to leave the screen. So I don't know the rules of it or anything like that, but that would be the first thing. Can you get it programmed so that then you can leave and it will either fully auto trade, or you get it programmed as like an EA where it will then just send you an alert when it happens, when this particular setup or whatever it is that you're using takes place. So that would be one thing. Now with intraday, there is another element here with regards to programming it. People often think that programming is like the holy grail, again, because then if they program it, then it'll all just do its own thing. Especially within intraday, you can have an intraday automated strategy, but with intraday trades, every pip counts. Okay, so one thing that you can manage when you're manually trading is things like spreads widening out and your actual execution. A robot, so to speak, or an automated system will just execute. It'll see the signal and it'll just execute. And you will find that there will be times that, unfortunately, your automated software will try to execute through things like important news events, whereby you could get slippage on your fills, and wider spreads as well, which ultimately will affect its overall profitability. So it's something to bear in mind there, depending on the type of system that it is, which I obviously don't, or strategy it is. I don't know what that is. So that is a potential answer, but I'm just giving you some caveats there that, especially with intraday, some of these systems, as far as execution is concerned, they've only got to have a couple during the course of a month of slippage type fills, and then it can erode your overall profitability. So it's just something to consider there. Only been trading recently, so that's the next thing. So that suggests to me, for me, to take a large pinch of salt with regards to this person's profitability so far. So I would be saying, great, it sounds like you're doing the right sort of things, but if you've only started trading recently, then that gives me a bit of a warning as to how robust is this approach that they're using. Because most people who have only just got into trading, there's a huge amount to learn. And so it could be that they've just maybe got a bit lucky with whatever it is they're using. But again, it's probably going to take them longer to know whether what they're using is actually any good or not. So that would be a question mark there as well. Obviously, everyone has to start somewhere in trading, of course, but what I'm saying is the robustness of this approach, if you've got someone who's only just started trading recently, they're not going to be as aware of things like slippage on fields, spreads widening at certain times, as someone who, as when they've accumulated more experience. So I would lower expectations overall in that regard. So the other thing is up to five trades at a time. Again, I think for a newer trader, I think this is too much. And again, in theory, it's absolutely fine, because if you've got up to five open positions, some will fail, some will win. That's good, because then you've got some that will compensate others. But it is a lot to manage mentally if you're doing that every day and you're having to be there because of the way that your strategy is developing signals. So again, that does add to that overload. Our brains can only take so much in. And so if you're trying to manage five trades at a time, you've only started trading recently and you can't leave the screens, it's not a great recipe at the moment. Although it might seem like you're doing fine, yes you are, but I think you just need to have a little bit of caution. And then lastly, the stress of watching the screens. Again, stress. Trading should not be stressful. If you're stressed in trading, you're doing something wrong. That's the bottom line. So now that thing of doing something wrong might be that you're over trading or being in too many trades for you at this moment in time, or it could be that you've got too much risk on, and so that becomes a stress for you as well. Even if you're risking something like, let's take the typical 1% per trade, and if you're finding it stressful sitting there watching, then you need to de-stress that situation. So the easiest way to de-stress the situation is to take your risk per trade right down. Bring it down. Forget about the money, because the money will take care of itself in the long run. In the short term right now, there's some question marks. And so whilst those question marks are there, my advice would be reduce that position sizing, reduce the risk per trade, so that you're desensitizing the outcome of the trades then. And so then they do become less stressful managing these positions, because the total risk is that much less. Yes, it means you're going to be making less money, but what you do is you take the risk per trade right down, and then as time goes by and you accumulate more experience, you can gradually, bit by bit, increase that risk up. So let's say, for example, you took it from risking 1% per trade down to let's say 0.1%. Considering there's a lot of trading going on here, there's still potential to be in 5 trades, then very quickly you're still going to be having 0.5% at risk across 5 positions. So for argument's sake, let's say take it right the way down to 0.1 of 1% per trade. And so you start to get used to that and you find it less stressful. And then over time, you say, right, okay, so after, I don't know, a few weeks, you take it up to 0.2 of 1% per trade. And then you can then bit by bit stagger it back up. So that would be my main advice with regards to managing this stress, because if it is stressful, unfortunately, you're doing it wrong, because what's going to happen ultimately is that that stress will manifest itself into mistakes. And what we don't want to do is make big mistakes in the markets. So it's coming back to the sentences we've got here. There's a few red flags for me, or warning flags, should I say. It's good that this person is already making some money, but they're just some warning flags where I would just say, okay, a bit like in Starsky and Hutch when he says, you need to, in the movie, you need to cool your jets, Starsky, and so maybe just cool the jets a little bit and just desensitize it. So your system itself, as I've said, I would question its longevity unless you can get it programmed. But I've already said that there are issues sometimes with programming. It could actually be that the system or the strategy the method that you're using actually just won't work over the longer term, because of the fact that you're having to be there for all of these setups and manage it maybe manually. In the long run, it's unsustainable. So it could be that, yes, it's fine at the moment, but actually it's unsustainable. So what you might need to do is revisit that as a whole and say, okay, I've got this strategy, this method. How can I adapt it to a way where I don't have to be in front of the screens all of the time like that? So maybe you could take it up some time frames, so that buys you more time that you are away from, that you can actually walk away from the screen and say, right, nothing will happen now for at least 2 hours, so I can go out, I can do whatever. So you can take it up the time frames as well. But certainly that would be my concern, that actually does it have any sustainability, because over the longer run, and sometimes there are strategies which do make money, but in the real world they're actually very difficult to stay with. So you might just need to make some adjustments to it to say, how can I change it? It might mean that it's less profitable by me making these changes, but I can get better balance as in my life with trading and a better relationship with trading, because trading should certainly not be stressful. Hopefully that gives you some advice there for this week. I shall see you soon.